Can you help us understand also why it is that this particular environment favors Hong Kong and Singapore more than the others? You look at the graph that you guys issued out there. Most of these nations, you're starting to see them. The ratio at least of the pace of rate hikes versus asset quality downside seems to be 1-to-1, except for Hong Kong and Singapore. What is it about these two countries that seems to be more favorable?
So the first overlay that we looked at is how much we expect interest rates in each market to rise. And in Singapore and Hong Kong, like we said earlier, the magnitude is expected to be larger and the pace is supposed to be faster. On top of that, you look at the proportion of loans that it is using variable rates, you look at the market position of these banks and their ability to pass on some of these higher rates, the ability for them to maintain those spreads, and how much pressure do they have to increase their cost of deposits and cost of funding. And we think that there is sufficient liquidity in these markets for them to maintain that low cost, but manage to pass on a lot of that higher interbank rates into their lending. And that really helps the net interest margins much more than the others do.
So Willie, one quick question from me. When you look at some of the markets that are hiking rates, at what point will higher interest rates start to weigh on credit and loan demand?
Yeah, so higher price of money, naturally the demand for loans will decrease. But our base case is because the pace of rate hikes is not sufficiently large, loan growth and loan demand is going to be moderated slightly. But in most of these markets, we have not significantly reduced our loan growth projections. This can change if there's a sudden turn in the Fed rate hikes or a domestic policy rate hikes, but that is not our base case. In terms of asset quality, we said earlier, a higher interest rate does not directly translate into much higher debt service burden. But I think there are other structural issues like over leverage in some household sectors in some markets, or in China's case, a property market, or in New Zealand's case, a housing correction. There are other structural issues that could have asset quality considerations.